We're in a macro environment now where you're seeing kind of like the perfect storm of variables here, which makes the most sense for wired battery storage deployment, right? Like you're seeing tremendous amount of load growth on the horizon. There's different forecasts that are predicting different growth rates for electric demand. There's a couple that are calling for demand to increase by half over the next 25 years, right? There's this dynamic where that amount of load growth is just going to wreak havoc on the stability of the grid. Prices are going to go way up, and residential customers are already under strain with how much they're paying for their energy costs.
Hi, this is Benoy, host of the Solar Maverick Podcast. On this episode, I'm excited to welcome Russell Laplante. He's the Chief Financial Officer of Convergent Energy and Power, one of the leading battery storage developers and operators in the United States. Russ has been in the renewable energy for nearly 2 decades, starting in wind, moving into utility-scale solar, and now helping lead one of the most important parts of the energy transition, battery storage. In this conversation, we talk about Convergent's work developing and operating storage projects, including behind-the-meter battery systems for commercial and industrial customers, utility-scale storage, and how batteries can reduce energy cost, improve grid reliability, and help customers manage peak demand. We also dive into the financing side of battery storage, including tax equity, debt, portfolio financing, merchant revenue, contracted cash flows, and why distributed energy requires a very different strategy than large utility-scale projects. Russ also shares his perspective on the huge opportunity around data centers, speed to growth, load growth, federal policy, the ITC, FIAC, and why storage is so critical as electricity demand grows across the country. And at the end, we talk about Let's Share the Sun. Russell and his wife were on the November delegation. We helped install solar and battery storage for families with critical medical needs, and who does Puerto Rico. I was excited that him and his wife decided to come on the trip with me and the other delegates. This is a great episode for anyone interested in battery storage, project finance, distributed energy data centers, and the future of the grid. Let's get into it. Hi, this is Benoy, your host of the Solar Maverick Podcast. I'm really excited to have Russ Laplante. He's the CFO of Convergent Power and Energy. Convergent is a battery storage developer and operator of, I think it's over $1 billion.
We've deployed about $1 billion into our projects.
Yeah. That's amazing. And it's about primarily behind the meter, solar and storage. They also do front of the meter. And it's great to have Russ on the podcast. We've been really working to have him on the podcast for a while. I appreciate him making time. We've actually known each other now. I can't believe it's been almost 16 to 17 years. Time flies by when you're having fun. Or on the solar roller coaster.
2010 Young Professionals in Energy Network in New York City, right?
Yeah, New York City. That's where we first met. Yeah, and it's amazing to see your progress and the leadership that you've had in the industry. And I'm excited to have you on the podcast. Like, really, this podcast episode is obviously focusing on the great work that Convergent's doing. And then also, too, like what you spend a lot of your time on with financing of solar batteries plus storage behind the meter and obviously from the meter storage. So, obviously it's very popular now. Everyone's talking about it. Maybe, Russ, the best way to start is if you could talk about obviously Convergent, your role as a CFO of Convergent, and then too, like, it's amazing for me to I've known you at all your different, I guess we'll say adventures or stops. I think adventures is better. If you could start off the interview talking about Convergent and your background and what you specifically focus there.
Sure. Yeah, I'll maybe take you through my background a little bit professionally. So
Definitely.
I've been in the renewables business for about 19 years now, so going back to 2007. Right out of college, I was going through the Goldman Sachs financial analyst training program. So I got a good generalist background in finance. At the end of that tenure, I was looking for my next step in my career. And I was inspired a little bit, actually, even during my college years. I was involved with a business seminar that focused on social responsibility and helping to drive positive change for the world through your career. So I was kind of bringing that experience into my career journey decision making. I ended up finding renewable energy. I had one misadventure along the way. I actually was interviewing for an equity research role. And if I had gotten that job, I actually would have been covering the fast food industry.
Oh, interesting.
Lucky for me, I completely bombed that interview and I ended up not proceeding down that path. And I was fortunate enough to meet an individual leaving Goldman Sachs to start his own company called Energy. And he took me on board. I was first employee in 2007. And I was fortunate enough to have like a front row seat in the maturation of the industry. So I learned very much from the ground up, developing projects, flying from New York City out to Kansas and Oklahoma and Texas. And I was working with landowners, getting leases in place, permitting, interconnection, like all of the building blocks of project development for utility scale wind,
Wow.
which was my focus for the first couple of years of my career. I was always on the finance side. I was running models, but I was definitely doing a lot of the hands-on development work, at least to start with.
Yes.
So I was at
That's pretty amazing. Like if you think about like after finishing like one of the investment banking programs, really to be on the ground floor and especially wind at that time back in 2007. And obviously that's where we met. And then I learned a lot too, because, the founder of that company, it was interesting. I was working at a private equity fund called Ridgewood Renewable Power. And then he was pitching me to our company to invest. And I was the vice president, listening to the pitch and the deck. And it's interesting because it's a small world in renewable energy. Even after now it's been 19 years. Sure, I started in renewables in 2007 as well. So it's like amazing to see the progress. And like the Solar Maverick podcast is about solar and entrepreneurship. And you were really the first, I guess, employee, right?
Yeah,
So like,
yeah.
I think that's amazing, right? Because you were not purely just doing financing. As you said, you were going to meeting with landowners, trying to get them to sign a lease, running the financial models. Wind still at that time was relatively new in those areas. Like what were like, I guess, some of the big things that you learned from that experience?
Yeah, it's a people business, like most businesses are, but renewable energy is all about how do you work with people of many different, backgrounds, many different motivations, like how you get in front of a landowner and negotiate with that person, and what drives him or her is a lot different than what might drive an investor or someone who works at a utility. Like
Definitely.
having the versatility to, I think, speak to the motivations of all the different stakeholders involved in the business is super important and super fun too.
For sure. And then also too, I mean, now that I'm thinking about it, that was also the start of the financial crisis, right? In 2007. That must have been an interesting time, right? And then also too, like, you just are finishing this analyst program and then that happens. Obviously the job market was extremely challenging. There was a lot of uncertainty. Did that lead to your decision maybe to do something a little bit more entrepreneurial? Maybe, and that got you into renewable energy. I know you talked about you did something with sustainability when you're at Bates. I don't know, did the 2007 market, I don't know what the collapse or or meltdown. I think they say meltdown.
It was melting down around us, like as I was, already at the company.
Oh,
So
so
we were
interesting. Okay.
we were
I
trying to
can
raise
see.
venture capital kind of at the worst possible.
Oh yeah, definitely.
We definitely made it work. We definitely over time we were very successful with our projects. We were able to definitely punch above our weight and get a lot of projects built.
That's amazing.
For sure. So it was a fun ride.
Yeah, definitely. It sounds like you learned a lot. And then, what was like the next part of your career journey?
So after Owen Energy, after the company was sold, I eventually made my way over to Tradewind Energy, Tradewind eventually became Savion after a spin out of the solar platform. But yeah, we were doing very large utility scale wind and solar projects. So I originally joined Tradewind in an origination role. So I was out working on PPAs and doing power marketing. And then I actually found a really interesting niche within the company. There just wasn't enough focus on the solar business. And I remember meeting the head of the solar business at the time was Scott Zymitz, and he came up to me and he asked me if I could just pay more attention to the fledgling solar pipeline because it just wasn't getting enough attention. So I ended up really kind of building a responsibility set around M&A of our solar projects. And then that eventually, turned into an opportunity for me to become the chief investment officer at Savion after the solar and battery storage projects were spun out of Tradewind and into Savion.
Yes.
So it was a fun ride.
Yeah, definitely. And you were there for a while, and obviously Shell eventually invested, right, or bought Savion, and then I guess you had. Can you talk about like that and then the transition, or now you've been at obviously now you've taken a different role. We were talking about this like from basically being the chief investment officer to now like basically a chief financial officer. You're also diversifying your experience. It's interesting now hearing the progression too of like both technology. You obviously have financing experience, development experience, power marketing experience, M&A, right? And then, like how, what attracted to you to like now it's not so new, right? Now it's been a year, right? That you've been a CFO at Convergent.
At Convergent, yeah. Maybe I'll kind of take us back through the journey a little bit at Savion and then into the current role. So when I first, after the uh, transition from Tradewind over to Savion, we were more of a develop and flip shop in the senses, we would greenfield develop, and then our business model was to really sell the projects once they were fully developed and basically get a return on our money. It's kind of like the venture capital business, really. But then we went on a journey from sort of transitioning from the develop and flip model to one of an IPP, of an independent power producer. So we would then be taking projects into construction, raising construction debt, raising tax equity, and then building up an operational group to be able to, build, own, and operate. So I was very much involved in the formation of us as an IPP. And as you said, in 2021, the platform was sold to Shell. That was a really fun journey. Our job within Shell was to help them find outsized opportunity in their vertical integration, or basically, trying to find opportunities for Shell to find offtake from our projects, work with their power traders and find, outsized value, throughout the value stream. So I was there from 2021 until 2025. And I decided that it was the right time to try something different. And, I had done wind and then solar and then now battery storage. And I think there's a lot of opportunity in storage in general. I think for distributed generation specifically, that was of interest to me for a couple reasons. There's very compelling, project level unit economics in the DG space. With utility scale projects, returns are very competitive. They're generally in like the 79% after tax unlevered range, whereas in the DG space, you could find returns in the mid-teens on a project level.
Sure.
What is really hard about DG is generating NPV efficiently from an SG&A perspective,
Okay, that makes sense.
because DG just doesn't obviously have the same scale as the utility business. So that's really where the success parameters lie, is like finding that ratio between NPV and SG&A in the business. And that was a big reason why I was attracted to Convergent.
Yeah, that's a great, like, there's so many tidbits in what you said. I think it's interesting that you worked on basically first being a pure like flip developer at NTP or COD to then be an owner and basically either, I guess, developing projects, M&A, and then owning the projects because it's really the portfolio of assets, right? And owning those assets. And when you're self-developing, obviously potentially theoretically it should cost lower than obviously, purchasing M&A from another developer and then aggregating, those assets. And then to hear like, you were more focused on utility scale, then to move to distributed assets,
Most
and
of my
then
career.
most of your career, and then to basically be doing a lot of behind the meter, and then obviously new technology, distributed assets, but also specifically like storage, right? And obviously everyone's, really focused on solar plus storage. Can you talk about like maybe like the opportunity and like maybe some of, I think maybe like talking about convergence, like projects,
Yeah.
and I think that would be a great way.
Yeah. Why don't I talk a little bit about who Convergent is? So Convergent has been around for 15 years. Basically, the beginning of the deployment of battery storage in the U.S. Like Convergent's been around since the very beginning of that journey. We have 800 megawatts of projects that are either operational, in construction, or under development. We have over $1 billion deployed into the business over those 15 years. We generally, like, our business model is to work with commercial and industrial customers on behind the meter battery and solar plus storage projects, and also work with utilities as well, sometimes front of the meter, to help them defer what could be, capital intensive upgrades to their distribution system.
Yeah.
We generally save C&I customers up to 40% on their bills.
That's huge.
We help utilities defer, multi-million dollar projects on transmission and distribution, because basically storage is just another way to build more transmission. So
Yeah, that's a great summary. And then can you talk about like the differences between developing and owning utility scale versus behind the meter? You kind of talked about some of the key points, but is there anything additional? Maybe. I mean, it's interesting, like value proposition, because once you combine storage, the basically energy savings of the customer behind the meter, you're talking about 40%, usually, well, depending on obviously the incentives, it's not, that much for just solar only. So it sounds like, things like, as you mentioned, like demand charges and other things. And it depends obviously like, what states or where they're located and if there's time of use. And can you talk about maybe like how you use the battery to benefit like the behind the meter customer? And then you mentioned too, like obviously the utilities, you're saving them, money as well. Should you talk?
there's a couple different business lines that we have. One is, a more traditional toll, where we'll build a battery, for example, for the benefit of a utility on the front of the grid, on the front of the meter. And a lot of that is around them deferring costly transmission projects. And it's generally the utility giving us the directives on dispatch. And we're just basically getting toll revenue for being available and for responding to dispatch signals that come from that customer. Another use case is behind the meter C&I projects. That is more of a peak shaving kind of model, where we are trying to predict the peaks, and then we're dispatching the batteries to reduce their peak over a given month or quarter or year. And then what that is doing is having the effect of reducing their bills for the entire subsequent year, because a lot of times C&I customers' bills are measured based on their peak demand
Yeah.
when measured in a given time interval. And what we end up doing is we get a share of that revenue. So if a lot of the bills based on peak capacity are based on, for example, capacity prices or transmission rates in that utility or that RTO, then we are saving the customer a lot of off their bill, and then we're getting a certain percentage of those savings. Um, Another revenue stream is demand reduction. So, for example, Con Ed in New York City, they have a demand reduction program where it's generally during the summer months. They are asking us to dispatch the battery at times where they have the most amount of load on their system. And we are paid for performance and being able to dispatch the battery during those key hours.
Yeah, that's a great like high level summary of the many different revenue streams, both behind the meter and front of the meter. How do you get comfortable with, obviously battery storage is so much more complicated than solar or wind, I feel like. How do you get comfortable from a modeling perspective on the different, revenue, I guess, streams that a battery has?
Obviously, depends on the use case. For example, if it's a coaling agreement, then we're going to be very focused, obviously, on uptime, on availability, on O&M, making sure that the battery is up and running and is able to respond to dispatch signals. And obviously, that is more of a contracted revenue stream, so it's a bit more stable in terms of cash flow. Obviously, it has a certain rate of return. There's always like a return versus risk kind of equation. In our shared savings model, that's a little bit more merchant in nature, so obviously higher returning, but effectively it's around our ability to predict the peaks. It's our ability to perform and dispatch the battery at the peaks, and then it's how much savings are we generating for that customer, which is a function of where prices like capacity or transmission rates go. So that's a bit more of a merchant sort of view.
Sure. On that. And then like if it's merchant, how do you get comfortable with cash flows? Usually like a financier, obviously like some sort of how can I say it? Like long-term offtake. You mentioned obviously about the demand response program, I think, that New York has. Are you also like I guess that's more like front of the meter, like looking at utility programs like the VETR program or SMART program, or, utilities have like RFP program, like California and Texas. Like, how do you get comfortable with some of these? It sounds like maybe behind the meter, it could be a PPA with the customer to get comfortable with those cash flows, but maybe behind the meter, it's a little more complicated.
Yeah, I mean, we're describing more of a portfolio here, and a portfolio approach and diversification of revenues. So I'd say our methods of filling the capital stack in DG are very similar to utility scale in a sense. Like we're using tax equity, we're using debt. The general structures are the same in terms of mini perms on the loan and the tax equity partnership flip.
Oh, that's a structure.
What might be different in DG is really the focus on portfolio financing. We would not be able to efficiently capitalize a single DG project with like a distinct tax equity structure.
Oh, for sure.
Transaction costs will just eat us alive. So it is very much a portfolio approach to financing these things. And then within that portfolio, it's making sure that we've got enough contracted revenue to support the debt financing.
So is the debt financing like essentially back leverage of the portfolio?
Yeah,
And then,
you'll generally have tax equity at the Class A level,
the Class A, okay.
and then back leverage at the Class B level.
Okay. Yeah, that's interesting. And then is it typical that like partnership model that partnership flip model that you see in solar, or is it unique or any sort of differences?
It's similar. I mean, what we generally have is a tax equity investor who's going to be putting in capital at a certain ratio against the tax credit. So you'll have the ITC, which is measured, based on the fair market value times the eligible basis times whatever the ITC rate is. If it's 30% or maybe it's 40% because of a domestic content bonus, but that decides if you're ITC. And then the amount of capital from tax equity is going to be a ratio of that. It might be, 1.1, something like that. Then, they would get the tax equity investor will get, the 99% share of the tax credit. They'll get a certain amount of cash, a certain amount of the depreciation, and then they'll generally flip out after, call it 5, 6, 7 years.
Yes.
And then we'll have debt at the Class D level or a back leverage, and they're generally sized based on debt service coverage ratio.
Yeah, that makes sense.
And DSCRs will, there'll be one DSCR for contracted cash flow. There'll be another probably wire DSR based on merchant revenue.
Oh, that makes sense. Yeah, I appreciate you explaining this because I feel like there's not that much information about the nitty gritty on how to like finance storage. And can you talk about like technology? Is it predominantly, are investors comfortable with lithium as primarily, or do you look at other technologies, or what is the sort of the preferred technology?
We are generally more like the lithium ion space. We're not necessarily going to be innovating on the technology front, since we're relying on tax equity and debt from the capital markets. We're a company to the sphere in terms of.
That makes sense. And then so it sounds like you're basically technology agnostic, and then obviously agnostic to manufacturers. I guess there's not any, maybe there is a tier one like battery list, some like the Bloomberg, tier one panel manufacturers. I'm sure like you have like an idea of like tier one battery manufacturers and all, but it's not like, it's kind of through the company. It's not like a third party or it could be, right? It could be like something like a DNG.
We'll be buying from like the Fluences and the Teslas
Oh, okay.
of the world.
The major battery storage manufacturers.
That's right.
And then if you could talk about too, maybe like the locations of some of the projects and maybe how like the economics are a little bit different, because it sounds like obviously you're all looking throughout the US. Obviously you've done a lot in New York.
Mm-hmm.
You have projects in like Puerto Rico. You're working with large asset owners or energy. Actually, it's better to say people have like high energy usage, right?
Right.
Because they're the most, you're not really working with like real estate investment trust who, technically are basically leasing to, someone to use a commercial industrial space.
Right.
Or there's a
maybe
much
just at a macro sense, to me, where battery storage makes the most sense are where electric prices are high, areas of the country where you have grid constraints, and potentially locations where there's new load coming on, but not enough transmission capacity to serve that load. That is generally where batteries are going to make the most sense. We're in we're in a macro environment now where you're seeing kind of like the perfect storm of variables here, which makes the most sense for wired battery storage deployment, right? Like you're seeing a tremendous amount of load growth on the horizon. I mean, there's different forecasts that are predicting different growth rates for electric demand. I mean, there's a couple that are calling for demand to increase by half over the next 25 years, right? There's this dynamic where that amount of load growth is just going to wreak havoc on the stability of the grid. Prices are going to go way up, and residential customers are already under strain with how much they're paying for their energy costs. There's this dynamic where traditional forms of generation, like natural gas, for example, is becoming much more expensive to deploy. Installation costs for gas are up 3x over the last couple of years. It used to take a couple of years to put a gas generation project online. Now it's taking 5 to 7, right?
Yes.
So there's just this like urgency for new solutions and flexible solutions, and that's really where battery storage, I think, can really shine. So we are certainly looking for those kinds of opportunities.
Yeah, and can you talk about these are all great points. Can you talk about obviously like energy generation has been relatively flat in the US, but we're seeing an exponential increase in power needs, as you mentioned. I think like 2026 and 27 is going to be the highest energy usage in the US for commercial and industrial generation. Are you seeing like a lot of opportunities related to data centers, data center development, obviously with AI? I hear about compute all the time and how energy is basically the limiting factor. You have Elon Musk talking about having data centers in space using solar. Can you just can you talk to like I guess have you worked with a lot of data center companies or that are developing maybe data center projects? I know they're trying to figure out behind the meter solutions because there's a lot of, I guess, negative backlash related to increasing power prices due to data centers for the whole customers in the utility service territory.
There's a lot there. There's a huge industry forming around this cell. So, speed to grid is how we're really thinking about it. And data centers are a tremendous opportunity for our business and for battery storage in general. And I think our value proposition here is, the value of compute, like the amount of money that's on the table for data center operators it's just tremendous. And their major constraint right now is getting online and having the power to support that, right? These are customers that are relatively price inelastic when it comes to their power costs because of just how much money there is to make in that compute business, right? So their constraint is how fast they can usually come online in three or 4 years, but a new power generation project, as I said before, could take 5, 6, 7 years at least on the gas side. And a lot of times you've got the situation where the transmission system, the utility, can only accommodate, a certain percentage of the data center's load right away. It's not always the case. It's maybe rarely the case that 100% of the data center's load can be served by the transmission grid right away. So there's value to the data center operator in setting up more of a flexible behind the meter, form of power supply or battery storage. And that's, I think, where a lot of our value proposition comes in, is because we can build a battery relatively fast behind the meter. We can help the data center customer design a flexible program to make the most of the transmission capacity that they have. So that's the speed to grid part. And in addition, we can use the battery to help them, reduce their peaks, save money on capacity and transmission charges. So it's a nice little value proposition.
Yeah, definitely. And that's a great way of explaining it, like just the value proposition for the data centers. I keep hearing speed to grid. I was just at the Acorn Finance Forum and I was on a panel and they were basically talking about like behind the meter solutions related to data centers. But the key thing that kept being mentioned is speed to grid reliability. Also, you didn't mention too, like this is actually helping the utility as well, having these distributed assets behind the meter, technically when, with ancillary services, with battery backup, like,
Absolutely.
this is a way too, like through distributed assets it's beneficial too. And for all the customers in the utility service area, because it'll create more reliability within the grid. And as we know, I don't know if you want to talk about, like, obviously the grid right now is pretty constrained in certain markets, especially where they want to have data centers. And it was basically not developed for this grid of the future that you're talking about.
The grid was not designed around the kinds of load growth in general that we're thinking that we're going to see over the next 25 years. And it's certainly not designed around a gigawatt data center being built in the middle of nowhere.
Oh,
Right?
yeah.
And there's new solutions that are needed and that are coming, I believe, but it's just not a system that was designed around what we're, seeing now.
Yeah, definitely. And that's really great to go to talk about. We're going to more talk about federal policy. How has like the big beautiful bill that was signed by President Trump on July 4th of 2025, how has that impacted, battery storage? Obviously, they kept the ITC for energy storage. They extended the full ITC. I feel like now everyone's solar plus storage developer and investor. Like, can you talk about like how that's been something beneficial for Convergent?
Yeah, I mean, we're definitely battery storage is a beneficiary of the preservation of the long-term nature of the investment tax credit. It's going to be around for the next decade. It was there was quite amount of sort of macro uncertainty going into the big beautiful bill. Like what is going to be the outcome there? There was definitely a lot of capital on the sidelines for a while, and I think we're still seeing a little bit of nervousness around just some of the volatility that's been happening in general in the market. Obviously, with close to a decade of certainty on the tax credit side, so battery storage can offer a relatively nice amount of price stability in terms of like knowing what the credit's going to be. You can't necessarily say the same for wind and solar. I think those industries will definitely endure. You're going to see, I think, a big build out of projects, within the ITC and PTC window. I think there's going to be a major rush, or there is a major rush happening to get those projects built. I think there'll be a recalibration of pricing, which I think is going to probably lead to a little bit of softness after this build cycle. And then I think those industries will reprice themselves, and I think they will remain competitive and be a big part of the solution going forward. Battery, because of the tax credit runway, I think we can avoid that sort of recalibration phase of the growth cycle,
Yeah.
which I'm excited about. And I think there's also something to say about, how valuations of IPPs and DevCos will look as well. Obviously, when you value a company, you're going to look at their installed assets, both operational and in construction, and then what is the value of the pipeline. In 2020, 2021, you were seeing pipelines valued very highly because there was a lot of positive momentum, a lot of policy support coming into these industries, and you were seeing pipelines valued very competitively. The past couple of years, that has not been the case. People have not been valuing growth. I do expect, at least for battery storage projects, as investors start to appreciate how much runway we have, I do believe that the value of growth will, come back into the market as well. So,
Yeah, that's a great perspective. Just to talk more about what you were mentioning with solar, if people are not familiar, the investment tax credit, the full 30%, basically ended in 2025. But obviously, people were safe harboring, projects to be able to qualify for the investment tax credit. Um, just to go to like the next part of the big beautiful bill was a few days after big beautiful bill was signed. President Trump actually talked about like fiat as an executive order. It's the foreign entity of concern
Right.
guidance related to countries, specifically really China, but it's China, Iran, Russia. I might be missing one other country, but really like having like the supply chain and ownership not majoritarily by those countries. And then we actually received the first part of the fiat guidance, the material assistance on February 12th of this year that starts applying to projects starting in 2026. I know we talked about this in the free interview, and can you talk about like what you see with like right now, most of the supply chain for batteries is in the is obviously coming from China and fiat countries. And while I think actually fiat is actually a very important thing, but I think the challenge is that industry can't move as quickly, or the supply chain can't move as quickly as legislation. Can you talk about like, have you as Convergent started looking at, opportunities that weren't like through the safe harboring and going forward with the fiat part, the first part of fiat?
So right now, all the projects financing are projects that were safe harbored at the end of last year. So whether it was through 5% sparing or work of a significant nature, we were able to safe harbor, all of our current build projects, which are, going through financings now. So, but it is something that we are absolutely getting prepared for, and what does the future look like, and fiat compliance, sort of like that is going to be the mandate. So absolutely, investors will be very focused on documentation, how you pass the material assistance ratios, how do you have it all supported through like a nice solid set of documentation and spreadsheets. It's we are confident that we will have a solution. I think the industry is definitely gonna recalibrate their supply chain. The first couple financings will probably be messy in the sense that investors will have a lot of questions. There'll be less of a, proven path to demonstrate compliance. But I think the industry is going to figure it out in the same way that, for example, Solar's figured out the domestic content bonus and bringing a lot of the manufacturing into the U.S. to qualify for the ITC bonus. I think it was pretty amazing how fast the supply chain moved to meet that need. And I think we're already seeing that for storage. I think you're seeing a lot of cell manufacturing move out of the fiat countries and into non-fiat, the U.S. As well, to a certain extent. So I am confident that we'll be able to figure out.
Yeah, definitely. It's amazing to me, like the innovation that if we look at it from like the solar side, right? The industry just keeps innovating quicker and quicker. And obviously there's a lot of smart people working on it. I apologize. I forgot North Korea was one of the other. So I apologize to Kim Jong-un.
He was in North Korea.
Yeah, the prime minister. I don't know what he actually calls himself. But that's really helpful. And is there anything that we might have not covered when you talk about like battery storage? I feel like we've covered so much, and specifically related to financing and the work that you're doing at Convergent. Is there anything that we haven't covered that you think is great to talk about? Dan?
I think just to reiterate how PG is different than utility scale.
Oh, that's a great one.
It is very much around doing things efficiently, like being able to come up with, project deployment strategies that are replicatable, right? Like doing more like programmatic development and build is so important in this space. Like a large utility scale project, like you can get away with with doing something unique and being like a one-off deal because you can generate so much NPV on that one build. But it's a matter of just the scale advantage.
Definitely.
It doesn't really have
that's a great point.
scale advantage. It is more about an assembly line. It is more about building out a programmatic framework. And it is, in the end about generating as much net present value for your company per unit of SG&A, per
That makes sense.
unit
What you're doing.
people time. But you just have to figure out how to do things with an intense level of efficiency.
And are you like looking obviously at software, it may be AI to like help with that sort of SG&A? Obviously everyone's talking about
You have to be. You absolutely have to be looking into how, whether it's AI or just, software in general can help you share knowledge within the company, help you track where is a given project at a particular point in terms of stage gate and budget and schedule, and to be able to share all that information within the company. I think it's super important just from an efficiency standpoint.
Yeah, definitely. That makes a lot of sense. And then, the Solar Maverick podcast, you're the Solar Maverick. It's now been almost 20 years. You've been in the industry, or we'll say distributed energy maverick. I don't know. I guess what advice? I mean, you've done a lot of different things, a lot of different technologies. You're still like innovating and doing, unique things that you haven't done before. Like, what is like your advice to people who want to be on the solar coaster or, because we need a lot of talented people to continue, because we're just really, if you think about it, beginning the energy transition, even though we think it's been going a long time, if we really look at like the exponential growth the next 5 to 10 years, like what advice would you have with people, who want to be part of the energy transition?
Get on the solar roller coaster, whether it's wind, solar, battery storage. It's a fun industry to be in. And as you said, the electric power industry moves in terms of years and decades, right? Like we're on a multi-decade transition here, and we need a lot more talented, ambitious people to come into this industry and help us solve these like massive challenges that we have in front of us. So it's a tremendously fun and dynamic and innovative and challenging place to be. I found it to be such an enriching career, and I'm going to keep doing it for a long, long time. I would definitely like people, come on the roller coaster. There are going to be ups and downs, but in the end, like it's just a fun place to be. So
Yeah, definitely. I think from the interview, people could, obviously feel the passion that you have towards what you're doing and the amazing work that you've done over the past 19 years. We talked about this in the pre-interview and before, like Convergent is actually hiring. Your group is hiring. Can you talk about like the skills and qualifications of the type of people that you're looking for, and how our audience could potentially learn more about job opportunities or career opportunities at Convergent?
absolutely. We are looking for talented professionals in the capital market space to help us close debt and tax equity deals. We're looking for an individual to come in and help us manage our insurance program and our risk framework within the company. We're definitely looking for developers to help us move the projects forward, construction managers, really every part of the value chain. Like there's just a need for talented people. So please check us out on Convergent Energy and Power, our website, and on LinkedIn. And there's definitely more information about us there.
Yeah, definitely. We'll have that on the notes of the podcast as well. And then in November of last year, you and your wife went to Puerto Rico with Let's Share the Sun Foundation, which Russell actually learned about from me. I've been organizing fundraisers for Let's Share the Sun. And then we're actually doing a fundraiser coming up on Thursday, June 4th in Jersey City, New Jersey for Let's Share the Sun. If you're not familiar with Let's Share the Sun, they basically are a nonprofit that installs solar plus storage, for families that have medical needs where they need electricity 24/7. Let's Share the Sun specifically is focused on Puerto Rico. It was started by Bill and Nancy Jordan. Bill's the founder of Jordan Energy, which is a developer, and they've started it since 2010. So it's now been 16 years. Can you talk about your experience, on the November trip? I know there's been multiple experiences, that you and your wife had on the trip. And
Well, yeah, Let's Share the Sun, what an amazing organization. As we said, I got introduced to them through you, Benoy. Yeah, so my wife and I went down to Puerto Rico back in November for our first delegation, and we were blown away by how important the work is, in an island environment like that with a grid that hasn't always been the most reliable. A lot of blackouts, a lot of moments where uh, owners of hospitals, residential, they just would not have power, and that it does really hurt the most vulnerable in the population, right? I mean, we met people who have different health ailments, who need very reliable access to electricity because of, a device that's hooked up to their heart or their lungs, or, they have some kind of medical issue that just requires, around the clock power, and to just be that exposed to a blackout is just, it's just very unfortunate. So I think having the self-reliance and the energy independence of having solar on your roof, it's a level of redundancy and, as I said, self-reliance that I think is so important for those people. So I think Let's Share the Sun just has such a value, just an incredible value proposition for Puerto Rico. So we were very happy to get involved there. My wife and I are recently married, and I think setting up our marriage for a focus on giving back and helping those in need, I think it was a great thing for us to do together. I think as well. And what I'll say lastly is, I've been in the industry. I've been in, solar and wind and battery storage for 19 years. I've never once installed a solar panel before. So just having the practical and hands-on experience to be able to get on a roof and to, get my hands dirty in that part of the business, that was such a valuable experience as well.
yeah, that's amazing to hear. I mean, we have obviously a lot of, obviously one of the points that you mentioned was about the beneficiaries, to meet them and get to learn about obviously the medical needs that they have and how solar and storage basically changed their lives. I know too, you got to know the construction crew as well.
Mm-hmm.
And their background. And what was really impressive to me was I've been on 3 delegations with Let's Share the Sun, was how serious you took the installation.
We were there to work.
You were there to work.
It was not a vacation.
It was definitely not a
But
vacation.
it was fun.
Yeah, I
It
mean,
was fun.
I've seen other professionals and me myself who are more focused on taking pictures, but yeah, please. So it was great to see how serious you both took it, and like to another level, and how involved you really wanted to take it. Well, this has been an amazing interview. If our audience wanted to learn more about you and Convergent, what's the best way for them to do that?
So you can go to our website, Convergent Energy and Power, or our LinkedIn profile, and there's a lot more information about the company as well as the job openings that we talked about.
Yeah, and then obviously we'll also have, Russell's LinkedIn profile as well. And, Russell, I thank you. This has been an amazing interview. You're the first podcast that we've done. I know this is your first podcast interview, and I appreciate you being on the Solar Maverick podcast. The first one we've done about financing of battery storage.
Okay.
And I really feel like you shared a lot of unique insights. And I'm excited to publish this episode of the podcast. I appreciate you making time in your beautiful home here today.
Appreciate you being here, and I hope it's been helpful.
It's definitely been helpful.
Great.
Thank you.